You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by Quikstrike, options pricing and analysis software. Quikstrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quikstrike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quikstrike is the perfect addition to your trading toolkit. Learn more about Quikstrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at Quikstrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. You can join us live if you're so inclined every Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern, or, of course, after the fact on your podcast player of choice. We don't judge. Just tune in, listen, and, of course, send in those questions. We do like to hear from you guys. And joining me on the old program today, we've got my cohort, my partner in crime, a.k.a. the happiest guy in futures options, Mr. Nick Howard from Bantix Technologies, by way of a little platform called Quikstrike. Mr. Nick, welcome back to the show. And I think you earned that title today. You are a pretty happy guy today.
I would maybe today, but I would be hard pressed to believe that anybody would ever describe me as such. But I'll take it today.
I thought it was an apt description of your demeanor on any given day. Our old buddy,
happy, grumpy. If happy and grumpy mean the same thing, sure.
If there was an Oscar the Grouch award of the futures options world, it would certainly be Nick's. He'd be closing in on it there. He'd have it to himself. All right. We also our old buddy Mr. Sean Smith, who was in studio last week. He's actually on a plane right now, coming back from the Risk Management Conference, which is of course the big volatility summit out there on the West Coast. I usually go to that. In fact, Nick, I think we've done the show from that event before out in California 2 years ago. I think you and I did it. I beamed in from California. I did not go this year. Just too many other things going on here to take a week to head out to sunny Southern California, even though it would be fun. So he won't be joining us on the show today, but we got a lot of fun stuff to talk about. Nick, since you're such a happy guy today, I will once again do you the honor of letting you choose where you want to go first. Do you want to go crazy fluid milk? I know you're a big dairy guy. What are you feeling in your bones, sir?
Well, let me go back to that. Remember, I was out there and then I had to leave because one of my kids had an emergency appendectomy, right?
That was the other one also in California. That was the OIC conference. Yes, we have done, you came out with me to that one, and then I beamed in from the Risk Management Conference, probably the last time I was in California, which was 2 years ago. So yes, we have a history of doing the show on other coasts, particularly the West Coast, but not today.
Yeah, that would have been nice to, we got back. Everything was good. So quick recovery. Yeah, that's a long time ago now, but we still talk about that. You know what? You're going to be surprised what I picked today to start out. And I know that, can I go off script a little bit or? Oh
yeah, go for it. 'Cause I already opened up gold. I figured you like gold, but we can go wherever you like.
Well, gold I can, I got it. Let me just disclaim it first, okay? Everybody knows out there, I'm the first one to say that I just talk about the ideas. I don't execute any of them. So I never want to be perceived as somebody who pontificates about knowing anything. But I just talk about what I see and what I like, and I put it out there for people, and I give my reasons, and that's my main thing. There's so much fake stuff on the internet. I just when I say stuff, I always disclaim it saying, this is what I see. And I'm not an expert by any means. I've just been around a long time. So
we shouldn't disclose that you are, in fact, the gold whale we've been talking about all these years?
Not the gold whale. I'm the gold. I told you. We could start with gold. Let's start with gold. The put thing I said that I've been saying, it ran up. You could have got out of your hedge, and now we're right back down. So you could have got you would have that put on for, you would have paid zero for that put, and it's worth whatever it's worth now. So Got to pay attention when those ranges are working for you. So we can go and we can jump in and talk about gold right away. Because if anybody remembers, I think I talked about the 1270 put was about a 20 delta put back when the futures were around 1295 and change. And then we rallied up to 1330 or something almost, whatever the high was. And now we're right back down below 1300. So you had a chance to get out of that delta. Make your money and then get back in here and still be in this May contract for zero and maybe get another run, when this market realizes that rates shouldn't be this low and that the Fed's not going to ease. But in any case, let's jump over. And again, that's purely coming from just an observer.
Coming from the gold whale. Oh, wait, I shouldn't.
Am I disclaiming myself enough? Because
yes, I
don't know if you realize, but the fake gurus on Twitter are getting annihilated right now. Did you realize that?
Well, that's a good thing. Anytime a fake guru gets annihilated, I think the market is a better place for it.
Oh, but there are people out there who are presenting themselves as, experts, offering trading courses and advice, and don't know anything, don't put any trades on themselves. I mean, that's why I always say I don't put anything on myself. This is what I see. I understand options pretty well. That's why I tell everybody, take a look. I put it out there as a suggestion. By no means is it trading advice, but it's just observations that I've made. So I'm the quick observer. I'm also, my new nickname, one of my new nickname for myself that I is the quick curmudgeon.
There you go. The quick curmudgeon. There you go. We could do stuff around. We could build branding around that. The quick curmudgeon report. Curmudgeon Daily Outlook,
That's
all that fun stuff.
I'm
giving you gold here, pun intended.
Right. and I'm not even that old, but I'm just going to go with the quick curmudgeon. That's you can call me what you want, but that's what you can call me.
You could say what you lack in years, you make up for in bitterness. There you go. How about that? See, I'm doing the branding for you already.
It works.
It works.
And just for the record out there, everybody, don't go out there and what do we got? Anyway, how come it's not there? Okay. In any case,
you want to dive into gold first, or do you have something else you want to start with? We can start there.
I lost my train of thought. For a minute.
Anyway, tell you what, I'll kick it off with gold while you find your train of thought. How about that?
No, I'm good. Let's go. Kick it off. Let's do our standard stuff, and then.
All right, let's do it then. Coming into showtime here, we're seeing gold take in a little bit of a breather, shall we say? An aggressive breather, but a breather nonetheless. Off net about 22 handles on the week. By the way, listeners, you guys, as always, can find these reports for yourself wherever you get the Quikstrike reports. Of course, you can always find the freebie version, cmegroup.com/TWIFO, TWIFO. You can follow along live with what we're doing here on the show, or anytime you want to get your futures options fix. Of course, if you want to log into the big boy stuff, quikstrike.net, QUIKSTRIKE.net is the place to go to log in, to sign up and log in for all of that good stuff. If you did that, you'd see what we're looking at right now, off about not quite 25 handles, close to it though. On the week, about 23 or so, nearly 2% to the downside, shy of that ever so important 1,300 level. The level everyone's kind of been talking about and pontificating that makes a big deal when we break through it to the upside. And of course, when we go back down through it to the downside, we see a similar hand wringing. That's pretty much what we're seeing right now. Breaking through that to the downside on the tail of some economic data and a bit of a rally in the old dollar means gold taking a bit of a breather out there right now. Again, off about 23 handles out there. Vol, kind of a bit of a mixed bag, which is kind of interesting. Seeing in that near portion of the curve, which is, again, really kind of gamma more than vol, but still kind of ticking up there. When you get beyond those contracts that are expiring in a few days, a bit of a different picture. You're seeing stuff kind of coming off a little bit. So maybe this blowing through the 1,300 handle, maybe that wasn't as terrifying to people out there as perhaps people might have thought. And looking here where the action was this week out here in good old CME COMEX gold contracts. We got the lion's share, just a little bit over a third coming in the May contract, close to 35%. And the big trade of the week also in that same May contract is the 13 halves, which would not have been my first guess. 13 half calls lighting it up, and actually opening paper, which is kind of interesting, and also pretty active throughout the week. The big day today, about 2,000 contracts, about 1,800 on Tuesday, about 1,700 on Monday, about 1,000 on Wednesday, and the lion's share of that opening. So I don't know, Mr. Nick, I would not have guessed that opening 13 half call paper would be the big print of the week. Does that surprise you as well?
Yeah, because I don't see the run up. We got a pretty good run up, and then for us to continue up there. But who knows? Maybe it was a sale of the 13. Right? I always assume people are buying it. Obviously, somebody's buying it, but maybe the initiator was the seller in the market. So maybe they saw something coming. Maybe they realized with the bonds and their extended or the 10-year with the extended rally they have, and then the Eurodollars with the short-term interest rates, those rallying pretty hard over the last week. They saw that that there wasn't necessarily the need for gold to be where it is, so maybe they started selling the 1350.
Oh, actually, you know what? I digress. I missed a big print actually, which is 1 month over, which is why I didn't see it. I was focusing on the May, but it was
1365 calls.
1365 looks like a big, maybe our friend the whale back a little bit though. This is a little bit near term for him though. We see a 1365 is doing 12,000 contracts this week. Yeah. 11,000 of that coming today. Followed on hot on his heels today by the 1405s, nearly 9,000 of those going up today, and the 1385s, 7,300. I got the feeling, Mr. Nick, that there's a bit of a vertical going up here, a little bit of a tree. 1365, 1385, 1405. What do you think?
Yeah, that looks like it's possible with because it's 20 or the 20 wide, right? 20 wide on the strikes, and there's a 1350 in there for good measure, but yeah, who knows? I mean, it could be buying one, selling two, or playing that we get part of a run up, but financing part of that run up with the higher strikes. That's a long way to go to get to 1405.
That's a big run. Yes, that's a big run.
Move.
And the ratios are kind of weird. It's not your typical fly ratios of 1/2 or even one by anything really. It's a funky ratio, that's for sure. And you're right, the 13 halves are kind of gumming up the works, as are the 13 halves trading 2,600 times today, as are the 14 45s 4,400 times today. So the strikes don't make don't make a heck of a lot of sense if it's any sort of it's got to be somewhat related paper, at least the first few strikes there. But weird prints going up here in June over here in gold. So a lot of weird stuff in gold today, Mr. Nick. And if that's not weird enough for you, if we go out a little bit, let's go all the way out to, where are we? June of 2020, 1800s going up 2,600.
You like to go way out there, don't you?
I do. That's kind of the gold thing, right? The gold thing, for whatever reason, the weird prints, except for today, always come pretty far down the chain. So interesting stuff. Our listeners like the weird stuff in gold too. Everyone's into weird gold prints. But that said, sir, what's catching your eye in gold from a shift in and slide in perspective?
Yeah, I mean, I would expect. I'm looking. I would expect that we slide back down into the bottom, or this part of this range we had before this last push up. That vol would be off a little bit, and if you're looking at the money, is generally it's soft across the board all the way out till Dece of Dece of this year. I also have June and Dece of next year out there, so really not doing too much. That move, I think, pretty much. If you look at the shift in the slide, a lot of the vol's coming off on the slide. So there's some offering of vol, but we're coming back down on the slide into the lower, not necessarily the belly of the curve, but a good part. Let me see what it looks like here on the 60-day contract. So we can take a look at that. Yeah, so we didn't slide all the way down into the belly, but I'm going to say the same thing I said when we talked about this. I looked when we talked about it the last time I put that phantom trade on only in the Quikstrike system, and I might have tweeted it too. I put it down when we were around 1296. We're pretty much at the same spot, and the belly of the curve at that time was the 1270 strike, and the belly of the curve right now is again the 1270 strike, and that vol is actually lower than it was a few weeks ago. So it's probably that time decay and that vol probably equaled out. So there's not much of a change over the course of those few weeks, but you have another opportunity here and again, I think, and this is pure conjecture, right? I mean, everybody talking about it, but I think I'm one of the few to admit that I'm actually conjecting and not claiming that I know anything in particular, but you just, from what it feels like, the bond rally, the 10-year rally felt really overdone, like it was too much. Like just once the rhetoric on the FOMC came out and said, we're not going to do anything right now, then people started to think we're gonna ease. And if you go look at the FedWatch tool on the CME Group website, you go out to December of 2019, it's got like less than a 30% chance that we still are where we are right now. To think that the Fed is going to come in there and ease, there'd have to be a complete mess going on in the U.S. And somebody I was talking to recently this week said it's more to the benefit of the foreign country to do something with their rates as opposed to us. They're the ones having more of a trouble economically than we are. So for the Fed to come back and start easing, I find it hard to believe. Therefore, my whole thing is I think the rates are going to go a little bit higher again. I think we're seeing our lows for a short term. Because the curve inverted, you're seeing a lot of action. We'll talk about it later. The surprise I want to talk about is in the Eurodollars. But, I think you've got a chance to see, we're off 22 this week we're off 22 this week, most of it today for the gold. I think you can see run back up there again. I think that once they see that it's that some of that's overdone, we might see some buyers back in here again. So I think that the opportunity to trade this gamma trade that we talk about with the 15, 20, 25 delta puts, I think it works. And I'm going to reiterate again, I said something, and when I do start trading again, I'll tell everybody. Full disclosure, I do equity and equity options. I haven't done any futures and futures options. I'm not ready to do that yet from a personal standpoint. I got to pay too much attention, in my opinion. But I think that the way I like to look at this stuff is these low delta options. When they're hedged, they give you, and I called them a few weeks ago, they called them mini straddles, right? So a straddle, when you buy it, it gives you a big belly underneath the x-axis, right? So there's a big triangle there with a rounded bottom that you got to fill. So you got to have movement so you can move that straddle up. You're basically like pushing the straddle up by the pointy part so you can get it up above the x-axis. When you have a low delta option that's hedged, there's a a lot less of a wedge that you got to fill up. So you don't need that. You don't need the tremendous move that you necessarily need in the regular straddle to get that premium back. So you got to really pay attention when we get to these. When we get this movement, you get a belly strike available that you can buy and hedge, and you don't need much of a move up. I think it's worth looking at. So that's going to be my repeated call here for people to pay attention, to look at that and see what you can do, because you got low tick. You might have like a $500 or $600 purchase that you got to make, and then you're hedged, right? So I think margin's better when you're doing that too, Mark, right? So I think you're only paying for the hedge on your futures, but I think they're going to give you some benefit, the fact that you got some options there too. But yes. That's what I like. I think that these are great opportunities when the curve is, the curve is a smile. We're not necessarily sitting in the base of the smile. The at the money is up the curve right now on the call side, but there are some cheap options out there to play on some movement, and I will continue to talk about that. And it makes sense when the curve looks like this. So that's what I'm seeing. I'm seeing that the shape of the curve hasn't changed much in the last few weeks, which still means that there's likely potential for either direction when it's given like that. And if that's the case, then even more so do these make sense, because you're getting a low volatility hedged option that if it hits the fan and it keeps going down, you're running through a strike, and you're probably going to get bid on that strike from a vol standpoint. And then if you run up, even if the vol gets hammered on the way up, you still got your gamma's going to get bigger as the vol gets hammered, and you're going to be able to get out of your futures, and get most, if not all, your premium back. So that's what I'm seeing. That's what I like to look at. I'm going to continue to look at it. One day, somebody will do something to tell me.
For the secret gold whale, aka Mr. Nick.
Yeah, when you all find out I'm the gold whale, I like to be the whale shark, because that's like that's a hybrid, right?
Yeah,
you don't know if that's a mammal or cold-blooded, so I'm the whale shark, right?
There you go.
So
you kind of just lurk there, kind of big and bloated, and you lurk for a little lichen and stuff to eat.
Yeah,
and
looks scary.
Looks scary,
but I'm a plant eater.
There you go. Yeah. That's a good analogy. Full of good analogies for Nick here today. Since we're touching on metals really quickly before we roll on, because there has been a lot going on the options front for copper. Not a metal we talk about a lot over there on CME. They keep setting new records. Set a new record just on the 25th of March, a couple of days ago. Almost 68,000 contracts open. Again, copper is not a story we talk about a lot here on the show, because it doesn't light up the tape, quite frankly, from an options perspective. It is a base metal, after all, a production type metal. And yet 68,000 is pretty high. That's come off quite a bit just in the last couple of days, down to about 48,000. Obviously, some contracts have come off the board there. But worth noting out there, copper is kind of this interesting back and forth story. Copper this week up. As gold is off nearly 2%, we're seeing copper up. Not quite 2%, about 1.3% here on the week. So the upside story for copper continues. People debating whether there's a potential copper crunch coming out there. But of course, obviously weighing on that is what's really going on in China. The Chinese demand story is kind of the driver of all copper story. And if China is having the real economic problems it appears to be having outside of our trade war, regardless of our trade war, then maybe copper demand may not lift anytime soon. But still, if there is a copper crunch coming, then maybe upside is ahead, in which case people are looking to load up on some copper. We are seeing the 295 calls out here in May, looking the lion's share of the action this week, about 1,200. Again, not a huge print, but it's copper. Doesn't do a lot of paper, so worth noting copper here. Copper vol also kind of a mixed bag, off most of it in the near portion, a little bit longer term, a little bit up. So interesting stuff out here in copper. Don't get a chance to talk about it too much here on the show. Just wanted to mention it, because a lot of you probably saw those headlines coming out of CME that open interest setting new records, and it continues to do so. All right, let's go to our old friend, Mr. Nick. Let's go to the Texas T. Got to hit on that as well. Got to hit on the old WTI, a.k.a. crude oil. Again, you guys can find all that at cmegroup.com/TWIFO if you want to play along, play the home game. We need a little buzzer, people playing the home game, Nick, and then we could say, hey, you win, you lose, drink, all that fun stuff. But let's go on to what we're seeing out here this week in WTI. We saw a little bit of, shall we say, the old spookage, to use a technical term. Trump coming in, once again beating that drum earlier, saying, hey, oil getting a little bit dicey up here. He tweeted, very important that OPEC increase the flow of oil. World markets are fragile. Price of oil getting too high. Thank you. So he was very polite about his demand for crude to come in. So in the wake of that, we saw oil taken on the chin a little bit. Then after people kind of digested that, it kind of rebounded. That's kind of where we are right now. Oil up slightly on the week, about a quarter of a handle or so, right around that 59 and a quarter level. So shy of that 60 level it broke through not too long ago, but kind of in this weird vacillating state. Obviously, we're still seeing issues with global demand and concerns about trade war and things like that. So all of this is kind of the fact that global economies don't seem to be lighting it up right now. All of that collectively weighing on crude and kind of maybe tampering down expectations in the near term. So when that tweet came through, it kind of just sent people scrambling to the downside. But briefly, saner heads prevail. We saw crude inventories also rising here in the U.S. last week by about 2.8 million barrels. That was compared to expectations for a turn to the downside of 1.2 million barrels. So that's a big miss out there. So that also weighing on things as well. In terms of what's going on out here from an options perspective, let's see, shall we? Again, the vol off quite a bit here, actually, coming into this week. Multi-point decreases across most of the months here in the WTI options. In terms of what was lighting it up out here this week, where the lion's share of the activity came, once again, May is where the action was. In this case, it was, you probably could guess this strike. It was the 60s. Once again, we flirt with the 60s. We vacillate it. We break through it to the upside, to the downside. 60s lighting it up this week to the tune of nearly 12,000 contracts. Pretty even throughout the week. 2,800 on Monday, 2,500 yesterday, 2,000 today, the big day. Tuesday, 4,300 lighting it up. Actually, a good chunk of that closing, about 2,000 of that closing. So a lot of back and forth, leaning to the closing side as we broke through that 60, I guess, to the downside again, and not quite managing to stay north of it. Then beyond that, we've got, what else is lighting up? Double puts, also pretty active, also in May. About nearly 10,000 of those, again, pretty active, but the lion's share coming today, about a third of that coming in today's activity. Then we got 62 calls, 57 puts, and 59 puts, rounding out our top five here. Again, all of that in May. So May, where the action was. Really quickly, let's just scan to see anything weird farther out. Not seeing a lot of crazy stuff, mister. And I guess the craziest, quote-unquote, would be out here in DESA this year, 50 puts going up 3,200 times. But that is not exactly crazy compared to what we're seeing in other names. Anything catching your eye here in the Texas Tea this week, sir, besides your ever-popular reviewing of the old reruns of the Beverly Hillbillies?
The Texas Tea is pretty well, first of all, President saying anything should be completely discredited. I'm sure I'll offend half the audience with that, but don't really care, to be honest with you. In any case, looking at it, just going down the futures column on the TWIFO, futures are right where they were at the end of last week. Vol is, you see again, you could see for sure the shift in the slide. It's showing you the shift is what's taken in the vol, right? If you go anywhere outside of May, everything is on the shift portion. So vol is soft. So you don't move for a week, even with a little bit of bouncing around here. We didn't have too much of a bouncing around. It wasn't so crazy. A lot of that stuff, you can trade it, but it's noisy, right? We got some, after that statement, we traded down to like 58.22, I think what it was, but we went right back where we were. And if we look over the week, we're going to be right where we were, but we traded up to 60, and I guess it's a pretty tradable range for the futures guys, but from a volatility standpoint, it's not going to do too much for it unless we start to break those levels. So what I'm noticing is mostly shift in all the curves. In fact, everywhere except for the front contract. We've got a little slide, but that's under 20 days, so we might not so sure how we even interpret that. And we see the quick skew, not much of a difference from last week. A little bit softer in the calls, meaning a little less offered and a little less bid in the puts. But all in all, not that much of a change, and that even varies by month. So let's call that skew not change, curve shift up and down, and that's the extent of what we're seeing. Still good open interest change, 2.2%. I think in general, the listed contracts across the board they're not seeing the same love that they saw last year for the quarter. At this point, the quarter ends tomorrow. So I think that a lot of this kind of sideways is affecting much of what's going on there. But this vol work's starting to get knocked down quite a bit here. If we look at this June contract and see how we are, we've kind of had a straight shift down. And if we look at the 30-day, which is right in between the May and the June at this point, and we extend that date range out for at least 12 months, we're going to see that, we had that nice run up when we had that break going into the new year. And then now we are basically at lows of where we've been over the last year. And if I look at the 2-year range, I think we're going to start to see similar things. So we're approaching 2-year lows. And if we continue to go sideways, I think we're going to see that. And then if I go out even further, just to give everybody perspective, I mean, we had our lows were in the beginning of 2018. We're not quite there. I think we were hitting around the 14. Yeah, we're not quite there. And right now on the 30-day, we're at like a 17 at the money vol. So we got some time until we get there. Is that right? That's interesting. No. That's the historical volatility. Yeah, so that's right. So I'm sorry. I was looking at that's actually interesting. From a historical realized volatility, we are not nearly as low as we've been, but from an actual vol standpoint, we're not quite there, but we're getting, once we get below 20, we're going to start looking at some lows over the course of the last year. So we had a little bit of belly going into 18 in the early 18. If we took that belly out, we are pretty much very close to the lows we've seen over the last 3 years. So that's a long way of saying, let's watch vol. I think it's got a chance. Unless we move outside this range, I think it's got a chance for us to soften up even further.
Speaking of some vol softening, that's what we're seeing out there in the equity land as well, listeners, in general. But today, compared to our last show, net vol is still up. Of course, remember, listeners, you saw that big spike in equity vol towards the end of last week, beginning of this week. We're still coming down off those levels. So net, we're up from where we were a week ago, which was the VIX is about nearly 15, about 14.8 or so. So that's up a little over a point from where it was this time last week. Also saw RVX, which is the Russell VIX, up to 18.5. That's up 1.5 points. So that spread has widened out to nearly 4 handles, 3.7 or so out there. That's also up about a point. So we're seeing interesting stuff out there. Spoke to Sean right before the show time. He was getting on a plane, said he was coming back from the big risk management conference where a lot of the talk was on Russell volatility and what's going on with the Russell 2000 in terms of the volatility, some interesting research and papers. So I'm looking forward to picking his brain when he gets back in studio here maybe next week about some of the interesting developments and research and strategies they talked about out there using Russell volatility going forward. In terms of what's lighting it up out here this week in the old Russell 2000 options, we're seeing the Russell 2000 itself. It's been kind of a underlying name to watch over the past week. We've seen some interesting vacillations in the broad indices, but the Russell 2000 has been moving up about 22 handles, about 1.5% here on the week, coming into showtime about 15.33 or so. And we're seeing a lot of the action coming in this week, despite the fact that it's been kind of a net rally move over the course of the week. It's to the downside, actually. Some pretty decent prints in the 15.05 puts here in the Russell 2000 options, accounting for about nearly a third of the paper going up out there this week in that one expiration month. Also worth noting, the OI, again, up strong, about 9.5%. So it continues to grow out there, but downside appears to be where the action is out there in Russell 2000. Let's just see really quickly. Let's jump along over to the E-mini S&P, see if we see similar paper flow out there. Obviously, the S&P also up net on the week. Not quite as much. Again, the percentage mover, the winner, has been in the small caps, which is fascinating to watch how it ebbs and flows, given the fact that so many of the developments of late are on the broad macro front. Not traditionally an area where you see a lot of action driving the small caps, and yet the rate story seems to have been a bullish one here for the Russell 2000. S&P, again, up only slightly on the week, about 0.1%. So not the same upside story by any means. And once again, looks like a similar front. Actually, before I forgot to mention, those were the front week March contracts in the Russell expiring tomorrow. That where all that put activity was. and we're actually seeing front week put activity being pretty active here in the S&P as well. So a similar flow. We're at about 28.15, 28.14 or so coming into showtime in the S&P. 27.5 puts in the weeklies expiring tomorrow. So same time frame as we saw in Russell, also leading the bullet, leading the dance, about 36,000 of those. So a lot of action there. Vol, like we mentioned, interesting stuff out there as well. So Nick, seems like similar paper flow in the same time frame in both the Russell 2000 and in the E-mini S&P, even though E-mini S&P not quite moving as much, but still interesting stuff. Anything catching your eye out there in the equity space this week, sir?
No, I think you mentioned that the fact that we're kind of where we were at the end of last week, which is going to put us pretty much when we see the volatility down, since we have no movement along the curve, when you see the vol being low, that means the vol's been hit for the week. So all of these negative numbers you're seeing are primarily coming from the curve getting pushed down. So definitely seeing some softness in the index volatility, and that's for both the Russell and the E-mini. If we go out there and look at what this looks like historically, we're really not anywhere near the lows that we saw when we were really in the doldrums at the end of 2018. So we're kind of, I would say, if I look, we're kind of probably around the mean for 2018, 2019, but, we are nowhere near where we were from a low standpoint. We got down into the probably below 8 at some point at the end of 2018. So we had a ways to go before this vol is as bad as it was back then, but still soft over the course of the week.
Oh, yeah, we're nowhere near. We got many, many more depths to plummet before we can get into, like, let's say the 2017 doldrums of volatility when we were talking, realized vol on the S&P was like a 5.5. It was just non-existent. It was terrible. Mr. Nick, we got time for one or two more products. I'll let you pick where we want to go next. We could head into ags. I know you like rates. You touched on a little bit earlier. We can touch there. We could go somewhere crazy. What are you feeling like?
Yeah, I think let's just go talk about some Eurodollars for a little bit, because I had some good visits with my rate customer this week. Rate customers out in New York, so we did a little talking. I was sitting on some brokerage desks and did some discussing of what's going on with the yield curve and that kind of thing. So I think it might be interesting for people to take a listen and review some of the stuff that we talked about.
Yeah, well, CME just putting out during the show, actually, a record 6.2 million rate options trading yesterday, including nearly 4.5 million Eurodollar options, adding over 2 million contracts and open interest. They also put out, I think, a link to your heat map tool there, so they want people to visualize that. But so obviously a pretty active segment. I know kind of your old stopping grounds, not an area we get to talk about a lot. Obviously, with the yield curve inverting, all eyes have been focused on the rates of late. Let's see what's going on here in the euros. I get scared, Mr. Nick, whenever I hit select all in the Eurodollars, because
I wouldn't. I think we go specifically.
It brings up a lot.
Couple things that we could talk about. It's probably because otherwise it's like you spilled the sloppy Joe all over the floor with this.
It pretty much is. I see hundreds of thousands of contracts in every month across my screen. So why don't you regale us while I look for the tea leaves here to see what's going on?
Yeah, I would. I mean, I think the big things I want to talk about, we like we mentioned earlier in the show, the 10-year and all of the treasuries and the euros, they all pushed up pretty high over the last week or so once the Fed kind of made the statements that we were going to stop for a while, or we're going to stop for the near term, and then people started to conject that, we might see an ease if things get bad. I still think that's, and from the stuff that you're reading or the things that the Fed governors are talking about, that's pretty unlikely, I think, at this point, but that didn't stop people from speculating. And also, so I can give you some color as in terms of what happened. So I think what happened is when things were looking like we were going to sit around, there was a lot of selling in straddles that were tied to strikes of where we would be for the remainder of the year. Okay, so people were hammering some just below money straddles and figuring that they could sit on them and take the decay, and even if there was a move, that it was going to be enough premium in that move where they wouldn't get hurt too bad. So what happened when we started rallying, people started to come after the upside calls to cover some of that risk that they had from shorting those straddles. So if you take a look at the Eurodollar vol curves, and let's just talk about, we'll look at like the DEES contract and forward, DEES 9 and forward, you're going to see that there's quite a bid in the calls and the puts are pretty flat today at the money. Now, just from my general experience, you don't see that all that often, and usually you see it the other way. Usually you see the slice from the top left to the bottom right, and in this case, we're seeing sort of a slice from the top right and then evening off on the puts. That's a really, really cheap vol in general, it's a really cheap vol for the put. So that downside has gotten hammered, and part of it is because now they think that, where there's the expectation of any tightenings is gone, so they wanted to catch, get back into some of the upside in case there was a problem or there was an ease, and they had to cover some of that risk. Now, with that being done, there was in the Eurodollars, what famously happened is when a strike, when strike or strikes get out of fashion, they just get hammered. They sell them and sell them and sell them. And it's like that shoes you wore for years, and all of a sudden you don't like them anymore, and they're just kicked to the back of the closet. You completely forget about them. Okay, and then what eventually happens is one day, you drop your cufflink or something like that, and you look and you find your sneakers again, and you realize, I really like these, and you pull them out and you just want them again. So that's going to happen again in these puts. They hammer stuff, then locals offer the stuff because they don't want them. They don't want them own anymore, so they offer them lower and lower, and those puts are really kind of beat down. So what you saw happen over the last week is, there was a Bloomberg article about it, but then we were talking about some other things while we were out there. There was a big condor that traded, which basically took into account if the Fed does do nothing, meaning and they don't ease, which is probably likely the case that they don't ease, the futures are going to slide back down into this area. So there was a massive condor that traded. It was the 71,235 put condor, and that the body or the height, the height of the trapezoid of the condor was encapsulating, the strikes where we would slide back down into that as well.
Yeah, I'm looking at that right now. That the volume on this is just
enormous.
Listeners, whatever you do, don't make the mistake that I did of hitting see all, because it's such a fire hose of information. But let's just give people a frame of reference for how much paper we're talking about. We were just talking about copper, right? And they were making a big deal about total open interest of 67,000. There's 10x that entire open interest in volume just this week, just in one strike.
Right.
Here on these 97 quarters, part of this condor, they did almost 650,000 of these puts just in this one strike. Then 600,000 in the 90s, 97 and 3/8, 97 halves, 450. I mean, the volume here is just mind-boggling.
It's absolutely insane. And then the other funny thing about it is that we were sitting there and we were just kind of talking about stuff. And for the one thing I will give myself credit for over the years is I always felt like I was pretty good at seeing value, when to flip strikes and when to get out of stuff. And the one thing I noticed I was sitting there is that, there were some butterflies that you could put on where, the rule of thumb on the butterfly, if you can get 7 or 8 to 1 odds, then it's a good time to get in the butterfly. Well, there was another butterfly out there. And which one did I tweet? Let me put that out there so I can not make a mistake with my words. I think I put out I was talking about while we were sitting there, we were talking about the 71. When I say 71, it's 97 and 1/8. 72 is 97 and 1/4, and 73 is 97 and 3/8. We were talking about that, and at the time it was like 1 3/4 offered on legs, small 1.5 bid, and I was like, I think that's a do, because that's a 7+ return if the market goes back to where we were, given what the expectation was prior to that FOMC statement. So ironically, this morning, that butterfly traded thousands and thousands and thousands of times at 1.5. Okay, so that's easily worth 1 1/4, probably worth 2. When you start to look, that 2 gets you like a 6 and change X return. 1.5 gives you an 8 return, because 1.5 for a 12.5 tick possible butterfly, you have an 8 times return. Those are bets that are easy to make. And when you go a step further and see that the likelihood of the FOMC sticking at the current rate is 30%, you got an 8 to 1, that's below 13%. You get a 30% chance still, so the odds are in your favor there. So that's just some crazy, and that's the thing. That's why the Euros, you don't talk about them for a long time because they get kind of boring, but now you actually have a shift in what the vol curve looks like. It used to be always puts all the time. Now the calls are bid. That's not going to last necessarily. There's only so low we're going to go. The likelihood of them tightening or easing near term is probably not great. I mean, if the things really got bad, then there would be the case, but But anyway, that was sort of the interesting stuff that happened in the Euros this week.
This paper is just, I'm just wrapping my head around all this size. It just puts everything we talk about on the show into perspective, right? We talk about in some of our other shows, like our volatility show, a very active equity type product is the VIX. The ADV is about 650,000 contracts, something like that. That's one put trade, one strike this week here in the Eurodollar. It's 650 almost, just that alone. So yeah, the volume here is just completely different animal, which makes it fun, and I think also probably intimidating for a lot of newcomers to this name. But it's why we don't talk about it a lot. We don't get a lot of questions about it, but it does so much paper. I had a feeling you're going to be talking about this one this week, Nick, so I thought I would leave it for you to regale us as the former old school Eurodollar guy that you are. Meanwhile, though, we got to get to some of your queries. It is time for a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the feedback segment, the portion of the show where you guys take the reins. This time, we're going to start in Nick's neck of the woods. Nick, I love it, sir. I love it. Earning your nickname of the lovable curmudgeon of the futures option space. Taking Schwab to task this week on Twitter. I love it. They were tweeting about market volatility coming back. Stay current.
Did you see that? You saw
stay current. And Nick's having none of it. He responded to them saying, I love these ads, but take a look at my constant maturity options vol curves from Quikstrike for comparisons. Vol heading back to lower again. And then you followed up with more. You followed up with more about the skew and the sliding. This was great. This was vintage Nick, sir. I loved it.
Yeah, well, I tried. You know what? I wanted to make sure that it was understood. That's all scare tactic stuff. I hate that kind of thing, and I get it. But if people don't understand it, they're just getting, it's just not right that they do that kind of thing. But I thought that was a good lesson in the shift and slide anyway. It was a good opportunity to do it. Now, for the 2 or 3 people that saw it, great. I wish more people saw it, but hopefully somebody got some.
I think we retweeted it for you to put it out there to the masses, because that one that brought a smile to my face when I saw it.
Good. I try. That's my life's goal is to bring smiles to faces, either by being mean or nice, one or the other.
Lovable curmudgeon of the futures option space.
Quick curmudgeon. For the record, anybody out there tried to go out and get that domain name, I already bought it. So there.
Oh, during showtime?
I had it in my basket for a few.
Quick curmudgeon.
Quick curmudgeon.
There you go. You can do things with that. The quick curmudgeon report. I would watch that. That sounds fun.
Good.
Maybe you do a little licensing deal with Sesame Street. Get a little Oscar on there. You're good to go. All right.
Quikstrike logo with a frown, with a lightning bolt frown instead.
I think you're hitting on some gold here.
Got it.
Since you mentioned slipping and sliding, or shifting and sliding, or as a listener says, slipping and sliding. Let's get to that. Jack T wrote in. I think he has the terminology a little mixed up. He says slipping, but is it better to slip or slide when you're trading skew? I think he's referring, obviously, Nick, to your shifting and sliding report. Maybe we should regale him with, because maybe he's a little bit confused. Maybe we should regale him with what the heck we mean by that before we get into what's better or what's worse.
Oh, let me see. Where is
Jack T? Right under.
Oh, is it better to slip or slide when you're trading skew? Oh, well, I don't know. I think, that's interesting. I don't know if I necessarily think of it when about trading skew. So first off, if I'm slipping or shifting, your skew's not really changing. Ironically the pricing model is doing what
the market expectations are working, right? That's It's pretty much what you expect.
Yeah, it's going up and down, it's sliding. It's like those games you had as a kid where you rolled that gyroscope over the metal bar, right? And it kind of goes back and forth on there. And then the slide, shift. Right. The shift, we're not going to change so much the shape of the curve. The slide is mean you're going up and down the curve. So the shift might get you something when trading the skew, but this is just more meant to show you the volatility level. I don't think I necessarily look at the shift and slide about trading skew. I would focus on the quick skew column because that's going to give you a better idea of two things. It's going to tell you what the levels of the put and calls look like against each other, as well as what they look like relative to the at the money. And it's also going to let you see whether the shape of the curve has changed over time. That's really where the skew starts to come into account, as that channel between in this case, we'll call it the 25 delta put and call, as it widens, you're getting more of an opportunity to potentially have a skew trade in place. As it tightens, maybe it's the same thing, but in another direction. So, so is it better to slip or slide? I'd probably rather slide than slip because just in general.
Sliding is kind of what you expect, right? That's all things working out the way the market anticipates. Shifting could be anything. Then you're kind of throwing it to the winds, right? Right. That means everything is different. The skew is moving, and you don't know. That could be good. It could be bad. Whereas if you're sliding, you kind of know what to expect at least there. So I would probably wager towards that because that's a more anticipatory outcome versus shifting. That could be, you're throwing the dice at that point. And it could be good. It could be a huge winner. Could be a huge loser. Maybe if you expect to shift, that's good. But that's getting into crazy meta territory. But I wanted kind of more just take the opportunity to explain kind of what that column was and maybe correct his terminology a little bit. Speaking of columns and terminology, we got Tarry. Tarry up next. They're not going to Tarry, though. Maybe they're British. They're not going to Tarry. They're in a hurry. Tarry wants to know, Tarry, though. It's a little bit different. They want to know, maybe including... let me start that over. Maybe include a paying the rent report on the TWIFO program or in the Quikstrike reports. Would be cool to know which names are paying the rent each week. Well, this is kind of something we talked about before, Nick. We talked about with gold a lot. But these are names that are obviously just kind of covering their cost from a gamma scalping perspective. You could scalp aggressively and pay back the cost of decay on these names. We've joked about this before. Is that something you're intrigued by, Nick? Maybe a paying the rent report in the TWIFO? Or
that's a good one. I like that one quite a bit. I can take a look at it. The problem with TWIFO at this point is we try to make it fit in a certain size window, 1024 wide. So, but we're coming up with some ways to get back some real estate.
Well, maybe just in the regular Quikstrike then. Maybe it doesn't have to be in the.
No. I don't mind doing it. No, I don't mind doing it. I mean, the whole point is I want to make mention of. Make sure you let me mention something about TWIFO before we end it. But yeah, that sounds like a good one because that makes sense. It would be just a little indicator to let you know whether, even if it's a simple thumbs up or thumbs down, but we'll do something. We'll put some sort of little bar there that tells you what it's doing or where it is or whether it's covered or whether it didn't. It's really not. It's really a function of how much movement you got over the course of the week, right? Or more than anything else. So yeah, we'll take a look at that. I wrote it down. Always like new ideas to make these reports useful for people.
All right.
We got one more. We got one more question.
Oh, you want to do one more?
Yeah.
Oh, you want to do the CME one, the Bitcoin futures?
Sure, we got it. Because I think that's important. Yeah.
All right, we'll get to that one then, and then we'll wrap. We'll turn down the music. How about that? There we go. All right. Get our producer. There we go. Turn the music down. Mr. Nick wants to do one. We can do one more. Why not? Yeah. All right. This is actually an interesting one. Comes from Elwin, one of those two. He or she wants to know, why do you guys think CME won the big Bitcoin future battle? Was it size? This is obviously something we've been talking about a lot on our crypto program. It's a big topic in that world because people are kind of wringing their hands. If you're not familiar, listeners, of course, there were two contracts that launched almost simultaneously in December of 2017. We had the CME 5X Bitcoin future off their Bitcoin reference rate. Then we had the SIBO OneCoin future that listed off of their Gemini rate. And a lot of people thought in the early days, given the fact that it was a one-coin multiplier and Bitcoin was around 20,000 at the time, the CME contract was a big, meaty contract to bite off. It was a lot for particularly a lot of the retail. So people thought that might weigh in the favor of the SIBO contract. But as it worked out, the bit of the sell-off, some other things working behind the scenes probably conspired to make it the the CME's ballgame. And we've kind of been weighing in. I've got a lot of people giving me their thoughts on why they think that worked out. Nick, I'm curious, what are your thoughts? Why do you think the big contract ended up winning out in the end?
Well, as you will recall, I will pat myself on the back for this one. I'd said all along that the CME would win, not because of my relationship with them, just because of the way that the liquidity gets provided at the different exchanges, right? So I think the fact that you had better markets, more liquidity, higher volume, even with the bigger coin size, and then just a better idea of what to do with it more than anything else. I think that, and a better index of price. There was an amalgamation of multiple sources for that value as opposed to it coming from one place for the SIBO. So I think they won just because they were better suited for good, new, highly liquid futures products. And as much as I said before, I thought that the next step would be a mini, a one coin thing, but I don't know if that's going to necessarily be the case.
The market kind of took care of that for us, right?
Yep.
you don't really need the mini anymore.
Right, you don't necessarily need it anymore. Maybe they changed something else, but you could see even a micro. Now, I think the index micros are going to be enormous because I think that's going to take away a lot of volume from the SPY ETF too, because once people realize you can trade those micros and you're going to get just massive liquidity and it's going to be really fun. But I just think that CME is just better suited overall for new products, high volume products, just more able to do what's necessary from an exchange point of view to get that stuff handled. And we said it right from the get-go. We thought that CME would, even though they weren't first to market, that they would be the ones to be the last man standing.
Last man standing, indeed. It's like Nick and I are here, the last men standing on the show. There goes that music again. But you're right. They obviously have wherewithal in the future space. That's their bailiwick, so that certainly helped. And I've also heard some people making similar comments what you said about the nature of that Gemini and some questions about the settlement, and that certainly probably didn't help. And also the fact that the big beefy coin that was 20,000, now then 5x of that was a lot, 100,000 contract. Now you're getting, when the market sell-off actually helped the bigger contract become a little bit more palatable to a broader subset of the audience. So all of those trends kind of moved in the CME contract's favor, and we have a winner at the end of the day. So interesting stuff. If you like that stuff, of course, stay tuned to our Crypto Rundown show every Monday. We do all sorts of fun in that space. Nick, we'll have to get you on that one of these days, talk some crypto. You feel up to it?
Sure. Always glad.
Get the lovable crypto curmudgeon on there as well. You could expand the branding. You could be a curmudgeon of many segments, not just futures options, but crypto, whatever you feel like, technical analysis, whatever you feel like being a curmudgeon on.
Love it. All
right. Speaking of branding and new stuff, what are you guys cooking up in the land of Quikstrike, sir?
Okay, can you hear me over? Can you hear me?
Yeah,
okay.
I hear you fine.
Okay, because the music is loud for me.
We like to have a festive environment here.
Yeah, no. So I threw out the challenge to people last week about getting in touch about the new Quick apps for both TWIFO and for the Spread Builder. Not a lot of response back, but I did get one. I want to do a shout out to Darren Johnson. I hope it's okay I said his name. He was out there. He's got a lot of love for the show TWIFO, for the TWIFO report, and he came in there and was one of our first subscribers to that report. And I think we got to get more people involved out there. You can get out there and get the full report. You can get it. You can dive in and see all the stuff that we see all the historicals, all that kind of thing. You got to remember, you can learn more about it at fantix.com/pricing. You can see what subscriptions we have out there. But tweet at me, tweet at us, and we'll answer your questions. But it's something worth looking at. Spread Builder is a tool that's one of the best out there, and the TWIFO report is it's really, really solid. All you need to keep up to with market for any given product. And then when the quick options education, if you're new to options and you want to learn how the Greeks work and how the input affect the prices and that type of thing, you got to let me know, and we'll show you where that video is. And it's out there on YouTube, so pay attention. Go have a look. And finally, if you're looking for some edge, make sure you go search macro hedge out there on Twitter. You're going to learn some stuff by following what's going on with that.
Uh-oh, losing them right there at the end. Mr. Nick, you there?
I got you.
All right, there we go. I thought we lost you at the end there. So yeah, if people are interested, you put out that kind of offer to people before. I know you got a whole bunch of new options, pun intended, available for different pricing and things, annual and stuff like that over there on Quikstrike. Is the bantix.com/pricing, is that the best place to go? What's the best URL they can go to kind of kick the tires right now?
Well, I mean, bantix.com is where you're going to find everything, but really you should go out YouTube. We put something out a week or so ago. We got a lot of watches on the extended TWIFO tutorial, as well as the spread builder. You know, spread builder is really video one. It's so powerful that people will eventually see. It's if you're trading options, it's worth it. I think what we're really trying to do with Quikstrike right now is just make it more accessible to people, and we're going to try to simplify some of the things so people don't feel so intimidated about it. But if you're trading vol, trading options, got to take a look.
And particularly if you're using Schwab, you need to get the real stuff, right? So head up Nick and his crew, and you could get that as well. Bantix.com, BANTIX.com, the place to go. Kick the tires and light the fires, as they like to say. Give him a follow on Twitter. We retweet a lot of his stuff. I know a lot of you guys see it that way. Give him a follow, QUIKSTRIKE1. Don't forget the 1 on the old Twitter machine for all the great charts he puts out throughout the week, and some links to some fun videos as well, and some acerbic commentary on ads he finds to be misleading. All that fun stuff and a lot more. Quikstrike1 on Twitter. And of course, our buddy Sean couldn't be here. Head on over to FTSE Russell, FTSERussell.com. Give them a follow while you're at it as well over there on the old Twitter machine, because they have some great data coming out. I'm sure coming out of RMC, probably some good studies right now. So check it out. Some good data. We'll get into the meat of all the vol goodness on the show next week. And of course, our friends over there at CME Group, a lot of great data and a lot of great research coming out of their team. They had Blue on recently. We'll get Eric on again. All sorts of good stuff. Keep up those reports and all the other good stuff, CMEgroup.com. And on behalf of Nick and Sean and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in questions, for all the fun stuff that you do. Keep it coming. And we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.